This is Matt from InvestiQuant. Today is Tuesday, January 4, 2022. Yesterday saw some wild action early on in the markets. They gapped up in the morning and they pushed higher, taking out Friday's high early on, and then around 10 o'clock or so, the sellers stepped in aggressively. We sold off, took out Friday's low on a strong sell-off that ended up reversing. And then we saw another rally back into the close. So we ended up closing above Friday's high. So we traded above Friday's high early on in the morning, followed by a sell-off below Friday's low early in the morning, followed by another reversal that took us back above Friday's high. So we ended up with what's called a bullish outside day, and that's where you take out both the high and the low of the prior session and close above the open. So we get a green candlestick that has wicks that are beyond both the prior day's extremes. So we'll look at what has happened following that type of candlestick formation here. Let me go ahead and grab all four instruments. The setup's based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, currently, we are continuing that strong rally from the close yesterday. We are trading well above yesterday's high, so I'm going to add that from the opening filters, opening area. I'm going to hit equals for open above prior day high. Next thing I'm going to do is go down to the price patterns library, and I'm going to grab the bullish outside day candlestick pattern that's available here on active today, or I could scroll down from candlesticks and find it as well. There it is. Next thing I'm going to do is go to indicators, put us in a similar market environment. We are above a 10 and above a 200-day simple moving average, and then I can click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you open above the prior day high, the prior day had a bullish outside day that closed above a 10 and 200-day simple moving average. Historically, we've got 47 samples in the S&P, 54 in the NASDAQ, 49 in the Dow, 21 in the Russell. The win rate on the S&P is coming in at 47%. That means 47% of these have ended up closing above the open for the session. For the NASDAQ, it is 54%, for the Dow, 45%, and for the Russell, 52%. So very mild win rates on these. None of those are very strong in either direction, all pretty neutral readings there. If we look at the average moves, the average loss is quite a bit larger than the average win for the S&P, and that is also the case for the NASDAQ, for the Dow, and for the Russell. So all four of these have had larger average losses compared to their average win sizes, meaning the bigger moves following this type of pattern have been to the downside. They have not happened consistently. As you can see, the win rates on them are pretty neutral, but the bigger risk has been to the downside following that pattern. So hopefully you found that helpful. Good luck today, and we will see you next time.